Hi everyone, my name is Taylor from thetradinganalyst.com, and we're going to take a look at a bunch of charts here, and I'm going to give my analysis and my thought process. And really the idea here and the goal here is to just kind of go over the way that I look at a chart. It may not be the way that you look at a chart, and that's totally okay, but this is just kind of, hopefully you can learn something from the way that I see price and that I see the movement on the chart, and hopefully you can learn something from listening to my thoughts. I've been doing it for a while, and hopefully my experience will mean something to you and you learn something from it. So let's get to it. The first one that was requested is TTWO, and let's just kind of look at the longer term chart here. So it's a very nice trending chart. So when you see a nice trending chart, you really don't want to, unless you get a really good plan to short it. It's really not a good idea to short a stock like this. All right, the trend is very strong and in the upward direction, and I just kind of want to go over something really quick about how you don't have to predict anything in order to do technical analysis. So this is just one little thing that I want to kind of do as an experiment. So you could easily ride a trend like this using some simple moving averages. Alright, so for example, let's enter in anytime it goes, and we'll just use about 2 years of data, so, or about a year. Let's say we enter in every time the stock trades above the 20-period simple moving average, which is the blue line on my chart, and anytime it closes below the 20-period simple moving average, we close that out, okay, as a trailing stop. Alright, so here's that first signal we get right here. That price is right around $38. Alright, $38 doesn't close below the 20-period simple moving average. It tests it quite a bit. Alright, so it closes right here. The close of that day is $44.69. So we have almost a $7 gain here. $7 on 38. What is that? Like a 18% gain. So that's an 18% gain. Alright, we come back here. Trades above the 20-period simple moving average right here on this day at $45 was the close of that day. Alright, $45, that's an entry, and then it closes right here below for a $1 loss. So we're looking at a $1 loss versus before a $7 gain. So 1 loss to 7 gain. Alright, so it trades back above the 20-period simple moving average. Alright, here's another trade right here. This one closes at $48. $48 closes below right here for a 75-cent loss. Alright, so we got $1 loss, 75-cent loss versus a $7 loss. So right now the gains are far outweighing the losses. Alright, here's another one right here. Trades back above the 20-period simple moving average. $49. Alright, $49 right there. Doesn't close below until right here. That's a $9 gain. Alright, $9 gain. Alright, and we could do this over and over again. Here's another one. There's a small stop out here for maybe $1, $2. Here's another one. $59 is right there. Doesn't close below it until this day right here at $74. I mean, so we're looking at 59 plus, that's about a $14 gain right there. So we got a $14 gain, $9 gain, $7 gain versus, you know, a couple bucks here and there. And that's just using a simple moving average and riding this trend. That's it. There's no predictive nature. Oh, technical analysis doesn't work. That's technical analysis. There's no predictive nature in this. All right? You're just riding this trend. So the reason I'm kind of talking about this is because, you know, I get every time I post on here so many comments. Oh, technical analysis doesn't work. Well, this is technical analysis. You know, there's a lot of different ways to make money in the market, and this is just riding a trend using one squiggly line on the chart. Above it bullish, below it bearish. That's it. That's it. Simple. So, kind of pointing that out because there's a lot of ways to make money in the market, and by using something super simple like that, you can easily make money. You can easily make money. And that's it. Alright, so hopefully that'll make sense. And nobody's going to argue with me a bunch. Even though they probably will. Okay, so just looking at this trend here, very, very bullish overall. Let's look at some short-term levels. Breaking over this, I guess there's not really a trend to break over, but clearly there's resistance that was broken over. When you have a tight range like this, trading sideways, you know, traded between $75 down to about $71. You know, it's about a $3 to $4 range that we traded in for about a month and a half. So anytime that happens and then we start to peek its head over like this, where we trade into the Bollinger Bands, that's going to be a nice long signal. So, and that's because when you get compression ranges, it's building up energy for the next move. Okay, so finally getting this break higher, I think that this is the beginning of a move here for this stock. So same kind of thing right here that we saw on this stock, TTWO, tight compression range. We break out of it. Look at it busting out of those tight Bollinger Bands, and then boom, went from about $61 to a high of almost $80. So that's about, what is that, like a 30% gain right there, just from that simple sideways trading. Technical analysis doesn't work. Here you go, breaking over this range. So same kind of thing. This is a lot cleaner pattern, and also traded sideways for what, 2 months, whereas here not quite as clean of a pattern, and traded sideways for about half the time, but nonetheless. So what I'm saying is, don't expect a $30 move. I mean, it could happen, but you know, the longer that it trades sideways, the bigger move you should expect. So maybe expect, I don't know, a $15 move, something like that. But what you can do is use some simple moving averages. Rather than trying to predict how far TTW will go up, what you can do is, for example, in this case, buy this breakout right here, and then sell when it breaks below. And what I mean by break is a close below the 20-period simple moving average. Simple, easy to use strategy. And that way, you know, you're not predicting, oh, TTWO is going to go to, you know, 100, and I'm holding for that no matter what. Well, we don't know if it's going to 100, and you could be waiting for 100, and it could go all the way down to 30, and then you're in a loss. So that's why you can really, really strongly advise using moving averages. I don't use them as support or resistance. Some people do. I think that's not really a good way to use them. But again, there's a million ways to make money in the market. But I just like to use them as, you know, just seeing where the trend is. Are we trending up? Did it break that trend? Broke below there, and you can see when it broke below that 20-period simple moving average, didn't really go anywhere for a while. Yeah, it broke back above it, but you know, it could have easily gone from here all the way down here. So you can stop out here. You know, just for example, going back to that other point that I was talking about earlier, you know, buying above the 20 period simple moving average, selling when it goes below. Well, right here, could have sold right here. The close right there was 70, let's just call it an even $74. Close back above here, right here, the close was $74.50. So you're buying just 50 cents higher when it goes there, and you can get back in that trend. Nice and easy. Okay, so, geez, I've talked a long time. I'm going to try to get to these other charts here, so hopefully that struck a chord with someone. Alright, ATVI is going to be that next one we're going to touch on. Alright, ATVI, this is one that we've been keeping our eye on before. You can see that it broke over this trend right there and bounced right at support. So here's it bouncing at support, here's it bouncing, here, 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 and then we broke higher. So nice action. Just keep in mind we've got resistance up here. So you can see it ran into it here, 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 and here we are. Look at where the high of the day was, right into this resistance point. Okay, I didn't pre-draw this line before here. That's been this line, that 61.25 level has been here for a long time, ever since this was there. I drew it when we got these candles up here. So look at where we reacted to. So what I like about this move higher on ATVI is this huge volume. All right, you don't get many huge volume days like this. This is bigger than the last several days. So again, keep it simple. A lot of volume means what? A lot of people bought. All right, that's bullish. Just keep it simple. So this is another sideways consolidation range. So we've been trading sideways since the middle of May. So we've got about 2 months here of trading sideways. So a close over about 61.25 would be very bullish and would probably signal a new breakout point for ATVI. So moving on, Costco. Costco, very bad. So overall, I'm going to show you this weekly chart here. Has been riding this trend here since 2010. You can see for about 3 months just traded sideways, or I'm sorry, at a slight angle against that trend line. Got a bounce here against it, here against it. Here is where we took that pause, and then boom, broke here. So what's bad about here is that we broke to these highs, all right, and see how it kind of went to these highs, similar level, similar, excuse me, I can't talk, similar level, but never really was able to break over that. And then not only that, but then we broke these lows right here. So to me, this is some bearish action, and it can get some short-term bounces. You know, we're really, quote-unquote, oversold on the RSI, but the RSI can stay oversold for a while. But my point is we can get some kind of a bounce near $58, I'm sorry, 158, and it can still be, you know, kind of bearish. But as it stands right now, you know, had our chance to bounce at this 152.50 support. We didn't really do so. To me, it's not really a place that I would want to really initiate a new short. I'd rather initiate it near 158 on the retest of the 20 period simple moving average, because that is declining by the time it pops up here. And I'm not saying it's going to pop up, but just if it does, that's where I'd want to short it, because it's the best risk reward. And why is it the best risk reward? Well, because if it breaks over about 160, then I wouldn't really want to be short Costco anymore. So that'd be just a really small loss. So that's the kind of, you know, I'm going over lessons tonight, but it's really important. So that's the way you kind of want to look at it, is how much am I willing to risk on this trade? You know, to me, I would be, if you shorted here, I would still think that Costco, so let's say we shorted at 151. I would personally still think that Costco was bearish up until about 159, 160. All right, so that is 151, 160. That's a $9 loss if it breaks up to there. All right, so that's when I know I'm wrong. Whereas if we short it at 150, I'm sorry, 158, 159, that's a $1 or a $2 loss. All right, so that's kind of the way that you want to think about it, is what are you willing to risk, and what is your potential reward. But the thing that you can control the most is your risk, because we don't know, just like I was talking about the 20 simple moving average strategy before, you know, we don't know if it's going to give us a $14 run or a $9 run, but we do know how much we're willing to risk. That's in our control. Okay, fully in our control. Obviously, not 100%, because there could be some kind of crazy news and it could gap down way below your stop, or in the short case, it could gap way above your short and then you're just screwed. But you know, that doesn't happen that often. But definitely wanted to bring it up because it is a factor. Okay, I've talked enough about that. Guess I just feel like talking tonight. Shop is the next one that we can look at, and this is just a really great looking chart. Really great looking chart. I covered this last week, I believe, and really good looking chart. And you can see that it's acting technical. Every time it breaks out of clean patterns. You know, look at this. Straight resistance, straight resistance, straight resistance, breaks over that resistance, and then boom, just trends up. So here's another example right here. Breaks out here. You know, you're at $47. That's where it breaks out, and it doesn't break below the 20 period simple moving average until this candle right here. That's right around $92. What is that? That's almost 100% gain right there, just using that super simple strategy. What do you know? I mean, this stuff works. When a market is trending, when we're in a bull market like we are now, stuff like this is really great. So got to recognize the kind of market you're in, because then you can ride these trends. All right, so looking at this chart here, broke over this trend line. See, it's respecting that angle. We've got several candles hitting there, here, right here, breaks over that. We made a low here and then a higher low into that, and see the Bollinger Band squeezing. We're in a very tight range. Remember, this is when stocks make big moves, they come out of compression ranges. So here's that, another sideways trading right here for about, what is that, 6 months, and then we break over that. Boom, leads to a huge move. All right, that was just a sideways trading compression, broke out of it, boom. So really pay attention to these sideways compressions, because they can really lead to explosive moves. So right here, another sideways compression range. Right here, obviously not as long as that other one, so don't expect it to move as much as that one. It totally can, but I'm just saying, just because I use that example doesn't mean that's going to happen again. But we did so for about a month here, so you could expect a pretty nice move. Other thing I want to point out, nice little volume pop. Nothing crazy, but definitely above the average that we've seen here recently. So nice action, and I think that shop is ready for the next move higher. The next one we're going to take a look at is NOK. So NOK, nice trend so far, and I'm seeing some resistance that we had here, from here, there, right here, We cleared it, and we kind of broke back below it, but now we're back above it. So that's a nice little bullish break. Another thing that I'm seeing here is potentially, yeah, a nice little trend line here that we can use for a breakout. So if we break over this trend line, and it looks like it's going to do it, but if we break over that trend line, we can expect a nice move in the upward direction. The next one we're going to take a look at is Netflix and then Google. Netflix bounced right around support. You can see it was previous resistance right there, and you know, it broke a little bit below that level, but this is just if you watch these videos, you know that sideways consolidation ranges, not only do they lead to big moves, like here we go, here's another one, boom, broke higher. That was what, a $20 move on a high price stock. So but back to the chart here. Sideways trading not only leads to big moves, but when you come back to test that range, like shop, if it ever comes back to $45, you better believe there's going to be a lot of support there. A lot of support. And it would definitely lead to a nice bounce if we get there. So just kind of keep that stuff in mind. So got a dip, and then we have this nice move in the upward direction right here. And let's see here what I want to really say about Netflix. It's not super clean, but to me, I like how we had this low here and this lower low here, and then we had this move higher. So eventually it's going to break that high. To me, it's not really at the point where I want to buy personally. I'd rather buy maybe a little on a retest. Who knows if we'll get it, but that's just my personal style. I'd rather want to get it on a retest, but overall looks pretty decent. Not the cleanest look, but I'll go over some levels here. We're going to have resistance from that previous high, and then the next resistance above that is going to be right around up there. Can't even see what that level is. Right around 167 or so. So right around 167 is going to be that resistance above that. Next one we're going to take a look at is Google. Same thing, you know, not really the cleanest look, but bounced at support. You know, we had the support here from this previous low, this gap up low. Look at where it bounced. This is very simple stuff right here, and this is actually one that we traded at my site, and we got some calls down here at the support, and it was about a 400% gain that we got on those calls, so that was a nice win. But getting back to this chart here, we got that support, and then we have resistance. You know, it's really between about 995 and about whatever these highs up here are, about 1007. So 1007. So about a $12 range of resistance up here that we're definitely going to have to deal with. But nice bounce back above the 20-period simple moving average. If it dips back below, excuse me, I can't talk. Near the 20-period simple moving average right now, about 955, 956, we can expect some kind of a bounce here in the short term. The next one is SBUX. SBUX. And SBUX had this support, and if you watch, volume by price is very important. So this is just another way to look at support. So this is a volume by price bar right here. All these gray bars up here. This is not just some random gray bar on the chart. Okay, this is what people get confused about when they say, when we talk about technical analysis like this is just some random thing that has nothing to do with the chart. Well, this is buying and selling. So this is volume. That's exactly one of the most important things in the analysis of securities, is seeing where people are buying and selling. So we have a lot of people that bought and sold in this area, and look at where we're getting a bounce from. All right, look at where we're getting a bounce from, right at that level. So I think that Starbucks could be looking at a bounce here. We broke over this trend line right here. Broke over that trend line. We're back above the 10-period simple moving average. You can see MACD looks like it wants to cross. And we're back above these highs. It's really the first positive action that we've seen in a while. So we broke lower right here, and you can see we had this nice little bounce right here, but it wasn't even above the 10 simple moving average, and it kind of failed out here, right there. But right here, broke back above those levels right here, short-term highs, broke above it, and we did so with also breaking over the 10-period simple moving average on some pretty decent volume. So definitely think that Starbucks here in the short term can get a bounce. As far as targets, I don't really want to speculate. You can just use those nice little strategies that I told you before. Just looking at this one time right here, you can buy the break over the 20-period simple moving average at about $56. Come up here, get stopped out at about $60. That's a $4 gain. That's what, like an 8% gain on a blue chip stock. I mean, that's great. And then we got a break over here, come up about $61, and then you pretty much break even on that trade as it comes back down here. So again, simple strategies, and I don't even use that strategy. I'm just kind of pointing out ways that you can make money in the market using some very simple techniques. So yeah, I think Starbucks is going to get a bounce there, breaking over that resistance. MSFT. I wonder if anybody is still listening. That is the question. I've talked for a very long time. All right. Microsoft breaking over some resistance here, right there, getting rejected several days, right there, right here, finally broke over that. So now this level is going to be support. Got the 20-period simple moving average right there, around $70. So if it heads down lower, we can expect a bounce right there. To me, this looks like a little bull flag. We want our bull flags. They're just continuation patterns. So this stock is very bullish. See that? Trending up very nicely for 2 years. Oh, it's going to stop. It's going to come down any moment. I don't know that. You don't know that. So best to just kind of trade with the trend. Right now, it's breaking over resistance right here. We've got the 20-period in the 10-period simple moving average as a level of support. Next one is Visa. Visa, overall, very bullish chart, trading sideways for a while. You can see that right here in that range, and we can play the range here, short the high, buy the low, or you can wait for a breakout of this box, and should lead to a nice move in the upward direction. So just play that box breakout. The next one that I saw was for Disney. The person said, I can't make much sense of this chart. Well, if you look here, you can see that we have this lower rail support right there. And let me see if I can see something on the weekly chart. Yeah, so it's not a great looking chart to me. And here's another good lesson. You know, you don't have to, like for me, I wouldn't really trade this, you know, and you know, for example, you guys are having me look at, you know, 20 different stocks, and I'm not out there trading every single one of these just because I say, oh, it's going to go up, you know, because of this. That doesn't mean I'm going to trade it. You know, it's about being selective and looking for the best setups. So that's another reason that, you know, people think that technical analysis is BS, because just because I look at a bunch of charts, you know, I look at about 1,000 charts a day. But some days, like today, I didn't even make one trade. I didn't make a trade. And that's because nothing looked good to me. That's how you kind of make money in the market, is by being selective. And it's not about knowing everything. It's not about knowing about every single company and every single chart and what it's going to do. You pick the best one, and then you get confident on that one, or that two, or that three, whatever it is. But just because you look at every single, you know, I look at 1,000 charts a day, doesn't mean I can say with confidence where every stock is going to go. I have no idea. But I can say with confidence where a few of them are going to go. And that's how you kind of develop professional habits. Okay, so as far as Disney goes, we've got support down here at about 103, and that's kind of the make or break level for me in the short term. Definitely showing some bounce sides against this support. You see all these buying tails at the bottom. See a little buying tail, a little buying tail. Here we made some higher highs, some higher lows. All right, so 103. If that breaks, to me, Disney would be not looking great. So it doesn't mean I would go short or anything like that. I just wouldn't really want to be long from my personal style. So yeah, that's all I got for tonight. That's the last one I'm going to cover. I know that I talked a really, really long time on a lot of stuff, but hopefully at least one person learns one thing, and hopefully enjoyed it. If you have any questions, as always, you can reach me on my website, www.thetradinganalyst.com, and you can use the contact form at the bottom of the website. I'd love to chat with you. All right, guys, have a great night, and I will see you next time.